Hello everybody, this is Matador. It is still April 27th, 2009. It's about 12:10 p.m. Eastern Standard Time. So this is my noon video, and we're talking about this very nice gap fill, technically speaking here. So on this gap down this morning on the swine flu scare, it looks like the markets have rebounded a bit on the news that GM is going to restructure. So they're going to cut 21,000 U.S. factory jobs. They're also going to ask the government to take company stock in exchange for half of their government debt. And so the markets are digesting that, along with some better than expected earnings from several people. So that's neat to see this gap fill and then also stall briefly at all this overhead resistance, which is not at all atypical. Again, this is where people who were long, who got hurt, are getting some of their money back. Sometimes they will sell out happily. And but anyway, very powerful to see that. It's holding up nicely, digesting all this news. This is a nice gap fill from back here as well. So here's the 60-minute chart. This 87 number that I had drawn in from before is still holding up very powerfully. So resistance again and again. Nice little spike up here. Now we're selling off again. So you see this. It'll be neat to see if it breaks out. 87.25 will be the next area. Then if you go to a daily chart, we're starting to really chip away at this 87.50 area, I would call that. And then the next stop would be the next logical place of resistance again, which would be in the 92 area to my eye. You could go back in here and fine-tune this. So let's find out if what we're seeing is real. And the TRIN Q definitely corroborates this move. It spent the entire day well below 1.0. TRIN is right around 1.0, however, it's starting to rise with a couple notable spikes up above 1. And then here's an interesting thing to note, the VIX. So here's a big gap up. When the markets gap down, instead of doing a complete gap fill down to here and then chopping away at this lower side, it's actually holding up a little bit better. And that is just, to my eye, very indicative of a possible stall right here. And again, that's what we're seeing. Doesn't mean it has to go higher or fall out of bed, either one, but this does not quite perfectly match. Even though it is a bleed out of volatility, it doesn't quite match the intensity of this rally here. So very nice, almost a complete gap fill. VIX hasn't quite done it. So as a tiebreaker, that one doesn't quite make it. But neat to see some of those stocks also then rallying perfectly. Some of them are doing better than 100% return on their gap. So that tells you a little bit about relative strength in there. And the tick, last one here, has spent almost the entire day above 0. So just a couple notable spikes below. So watch how the S&P chips away at this $87 mark. If it can work its way higher, we still have some overhead resistance up here. Let's draw a trend line in there. And you already know that going into it. And of course it could fail. Just mark those swing highs and swing lows and read the sentiment of that chart going forward. Really cool to zoom in, really cool to zoom out. We know what we're chewing on here. And you can see the momentum slowing into all this resistance back here. Again, same thing as looking at a daily chart, all scrunched up. Awesome, everybody. Well, thanks for all your comments. I'm going to do a video right now to answer some of those questions from the previous couple days. We had a house full of people, so I didn't quite get to it this weekend, but it's coming. So have a great rest of the day, and I'll talk to you soon.